Hey guys, how you doing? So Dan from Trading with Dan here. This is the second edition of our new review of FinTwit, financial Twitter. So I got 4 followers from yesterday, so that's great. Obviously I've only really just started using this. I know that I've had it since 2018, but I just didn't use it for some reason. So don't ask guys. But obviously Trading with Dan was in the making back then. So yeah, anyway, so we're going to have a look at you guys. Hope you guys all had a good day trading today. Some wild news in the market. Without even looking, I know that basically we're going to be full of oil jokes again. So we'll see. Yeah, hedge eye PPT. It's not socially distancing. So obviously they've come into the market, but they've not done a good job. Yeah, given his positions, he's obviously got a bit long. When hedged, that's mine. Northman Trader, Politico, 484 billion deal struck by congressional Democrats and Republicans with Trump administration, centers around refilling the depleted Paycheck Protection Program, but it also includes some Democratic priorities like hospital funding and coronavirus testing. So yeah, so obviously that money ran out, that first money that ran out for Paycheck Protection. Obviously that was basically for small businesses to get a loan that can be written off and they can pay their guys 80% I think of the wages or whatever it was. But obviously it was getting claimed by big businesses because they're just basically greedy and they want whatever they can get, and they're just, yeah, anyway, I won't use a profanity there, but anyway. So Gerald Celente, he makes me laugh, this guy. If you ever watch I think what's the Trends Journal, that's it. Gerald Celente, he's a character. He's a character. From the New Trends Journal, with oil demand plummeting as a result of politicians around the world locking down people and closing down businesses, crashing oil signals how deep, hard and fast the global economy is sinking. Are you prepared? Yeah, it's pretty much true. I mean, we did talk about this yesterday. Oil is basically not getting bought by the Fed, so that is showing us what market should be doing. That should be the stock market, basically. Yeah, I've got that joke. The strong support at zero. Oil obviously disagreed with that joke and decided that no, I'm not accepting support at zero. I'll go negative 40. But anyway. So got a physical gold or silver yet? That's what's his name, isn't he? Yeah, Ray Dalio, the sleep at the wheel. His fund is basically blowing up. So we'll have fun watching that as the risk parity trade tries to unwind, but obviously can't really unwind without basically you can't pull the rug out from under your own feet, can you? Basically, that's what I'm trying to say. Randy Woodward, ECB holds call tomorrow, may discuss junk bonds as collateral. Isn't the ECB not buying junk bonds anyway? I thought ECB bought everything anyway. I thought ECB was just the bond buyer. I thought American companies were basically issuing their bonds in Europe, so the ECB would buy them. But anyway, ECB may discuss junk debt collateral call on Wednesday. It's the same thing. Anyway, getting lots of questions. USO holdings are now June 20% and July 5%. Sorry, are now June 20. Now USO holdings are now June 20% in July and 5% in August. Okay, I see. So there must be basically 75% in June. This is why USO is so ridiculous. No one should be buying USO. It basically is a derivative, and it's just designed at the moment for you to lose money. I mean, they've got to roll that oil contract down. So you've got to basically, you're buying oil at the next month's higher price. And that price then comes into the front end month, goes to negative 40, and then all your money just disappears. Anyone that can't understand that and buys USO is an idiot. But sadly, most people that buy USO are idiots. One, because it's available on a lot of platforms. They think, oh, it's an oil ETF. It's not as volatile as the actual oil. I'll buy that and I'll hold it. Until oil's $100 again. Right, that isn't how it works. So basically, they're the only people that will buy it, because anyone with a brain will not buy it. Anyway, there's USO for you. There's Shy Girl again. Who's this guy? Oh, Max Kaiser retweeted that. I don't know what that says. Jerome Blockland. Energy stocks have fallen 65% in October. 65% since October 2018. We're back at levels last seen in 2013. Oilcrash.com. Yeah, okay. Well done. Yeah, basically oil's down, guys. I don't know if you knew that. Yeah, again, oil down, guys. Don't know if you knew that. Oil down, guys. Don't know if you knew that. Another good day to make money. Yeah. Every day is a good day to make money. There's always opportunities. If you are scanning all the markets in the right way, you will find shares in the right sectors, in the right markets that are at the right position, in the right formations, at the right levels to buy or to sell. You just got to have a process to find them. What's this? Shocker of the day. Oil futures collapsing, yet exploration companies are up over 2% on the day and near a new rally high since mid-March lows. Well, there you go. Shocker. I mean, oil exploration, I mean, just if you look at any particular, I'm not looking at this chart, so I don't know, but what I will say, if you look at any particular day's price action in any stock, you've all heard of buy the rumor, sell the fact. So this stock could be down 80% of the year, or this company's this I'm guessing it's a company. So this will be an ETF, I guess, of oil exploration companies. So maybe it's down 80% on the year, and today it bounced up 2% on short covering because we've got bad news about oil getting so bad. I mean, it's a possibility. It's not exactly a shocker. It's just how markets work. I guess just a bit of attention seeking going on there. Cashed out on the puts, another wonderful straddle win-win. Thank you for the risk ranges. Oil pump tomorrow, ready to pull the trigger. Well, you don't pull the trigger on oil unless it's to sell. Breaking. Oh, Luke Groman. We don't like Luke Groman. Breaking. WTI June crude oil futures. Oh, just this. I did say this, guys. It's just gonna be oil. Oil. Ray Dalio again. Sleep at the wheel. Oh, that's nice. It's like some sort of aeroplane. There's no window there though. How's that work? We'll just give that a like. Yeah, read. I love reading. Honestly, I've got loads of books in here. Loads of books. I read all the time. I spend a fortune on books, guys. These like books that I buy, they're always on like about £20, £25 each, and I have like loads of them. I probably buy maybe 3 books a week and try and read about one. So trust me, they're stacking up. They're stacking up like that crude stacking up. But I've got more I've got enough storage space, so it's all good. Right, the commodity. So I'm not going to pay someone to take them away. Pay $40 a book. Anyway, commodity market is by so far the only market that is not rigged by central banks. Well done. Commodity markets are currently expressing this sad true state of the world economy. I mean, we're in like an echo chamber here, aren't we, guys? So they just read everyone else's tweet and write their own version. I mean, have they got what's that article spinning technology that you use to spin an article? Do you know when you're trying to fool the Google algorithms into thinking you've got new content, and you just have that software that spins an article, so it basically rewrites it, but just changes a few words and sentence structure and stuff. So it tricks Google, and then you just repost that in a blog somewhere. No, do you think that's what's happening? Maybe. Silver Watchdog. Oil's I can't read another oil one. Just can't do it, guys. What else we got? The Economists. Not as many Economist posts today. Southern. Maybe it's because we're actually a trading day now, so we on the weekend we'll get the same amount of Economist posts, but because it's a trading day, we've got lots of trader posts in between. There you go, guys. I think I just sussed it. You could literally hear the cogs whirring then, couldn't you? Southern European countries seem much more vulnerable than America and Northern European countries. Well done, economists. We don't need you to tell us that. We all know Greece and Italy are done. Current global lockdown needed to be extended another 5 years to fix climate disaster. Good one. That's obviously a dig at Greta. I think so anyway. They didn't manage to prop stocks up. That's good to see. I'm still short a few stocks. Today I had a good day trading. You can tell I had a good day trading, guys. I'm in a good mood. Yeah. Although I'm currently offside on the Bitcoin position, my stock portfolio did well today. Anyway, the price is setting a limit to how much the Saudi can supply to the oil market. At some point they too will have to start paying people to take their crude. No way to support 7,000 princes on that model. You go and get an oil, you get an oil, you get an oil. Yeah, the thing is though, it's only North America that's basically full, because North America is the world's biggest oil producer, and with all their shale oil, and yeah, so maybe Saudi's got lots of storage because they're a proper oil producing country. This is good. So these are obviously the bulls, as you know. So the bull's trying to go up. This is the resistance, which is basically just nothing. It's a duck, but the bull, but it's basically get the bulls are basically can't beat it, so it's going back down. Yeah, basically what this means, guys, is stock markets went down today. I do like it. Well, that's good. They've not got any horns though, have they? Maybe that's what it is. Who's this guy? Charlie. Oh, these are people I should follow. Yeah, we'll forget them. Oh, here we go. The clown himself, Gregory Mannarino. The US energy sector wants you to know President Trump is not bailing out big oil. He said no. He said anyway. Right, this guy, Gregory Mannarino. I do listen to his stuff. Like I said, listen to his stuff. He has interesting points. But this guy, they're gonna, when we're at oil about $50-$60 a barrel, they're gonna prop up oil. Oil's not gonna be let to go down. They're gonna prop up oil, basically. And then he's like, but it's got a fair value of $25. It's got a fair value, but they're going to prop it up, and then bang, it basically blows up in his face. His what he was saying. Oil then goes down, and then he's like, yeah, it's 25 where I said it will be. This is the 25 range, the fair value for oil. But it turns out, Greg, I don't know if that was the fair value for oil. $25. Yeah. Anyway, Max Kaiser. I do love Max Kaiser though. He talks sense. Basically, the difference between these two guys is amazing. This guy knows what he's talking about. This guy knows how to trade, but just talks rubbish. When plunder becomes a way of life. Oh yeah, this is probably just about the USO, about how it's just a scam. I don't know this guy. Millennials might be getting a hit with their second recession in almost 10 years, but look on the bright side. This time we might get paid to own a house and to fill our cars with gas. That would be nice, wouldn't it? I mean, I think that would be nice. It was the longest period between recessions in US history. Yeah. Wall Streeters becoming epidemiologists, politicians becoming market strategists, and everyone becoming an oil expert. I like that one. We would treat that one. This Northman trader, he's my favourite guy on Twitter. This guy is Daniel DiMartino Booth. Yeah, I won't say anything. Excellent paper. Oh wow, Paul again ripping me off with your Real Vision things. Yeah, I watched this earlier actually, this last stream. I didn't even know. I've only started using Twitter really, obviously now, as you guys know. I didn't know these guys did live streams on Twitter. This is amazing because I really like these guys, and now I can get more of them. So, oh yeah, I even commented when I was watching it. They were talking about oil going negative and everything going negative, and I was like, I hope my BTC doesn't go negative. Ha ha ha. Right, this is going to have to be the last one because I know we've been going on a bit now. I recently bought a pair of shorts on sale from Nordstrom. I received a confirm of my buy and my credit card was charged, and they just informed me they can't deliver, so they refunded me my money. I thought I was long shorts, but now I'm short a pair of gold futures or ETF owners beware. But now I'm short a pair. So basically just trying to be funny. I didn't realise Peter Schiff had a sense of humour, but he thought he was long shorts, but now he's short a pair. Oh well. Here we go. Josh Crum. I like Josh Crum as well. He is a Goldman Sachs guy though, but hey, we can't hold that against him. I think we can, but can we? Can't we? He's a Bitcoin guy now, and we're Bitcoin people, so maybe we can not hold it against him. I wonder if the Bank of England of America, the BOA, the Bank of America, understands that $3,000 is not a probable linear outcome. Oh, this is for oil. This is for gold. If it basically, they're talking about here how, in much the same way gold just oil went negative and just did what no one would expect. If we have a bit of a bust and oil goes for it and the GLDs break, GLs and SLVs and the gold ETFs and basically the COMEX and the London one, what's that called? London Bullion Exchange, LBA, London Bullion Association, they bust, then yeah, I mean 3,000 won't be the outcome. Yeah, I think we'll skip to 3,000. Yeah. So Bank of America basically put a price target on 3,000 for gold. Basically, that's, I mean, if gold is very, right, wow, I tell you what I'm trying to say. 3,000 is sort of a linear extrapolation of where the price is going now. If gold's going to keep going up, it is not going to be linear, basically. That's what he is saying. And that is the case. It's true. Just like oil going down, it was not linear. It accelerates. Things accelerate. George Gammon. So I'm going to give you that in 3 simple steps. Step 1. That's basically how every George Gammon video starts. Yeah, George Gammon. George Gammon's good though. I like him. He's like he's come out of nowhere to get to 100 subs on YouTube. He definitely has some good editing teams, but and he's got some good info and stuff as well. Yeah, he's doing YouTube like a business. I bet he's getting a lot of money from this now. There's other YouTubers I watch that are as good, if not better than this guy, but they're just not as well. Don't spend as much money on their editing, and they've only got like 40,000 subscribers, but this guy's got 100,000 literally overnight in probably about less than 6 months. But his videos are really good. Yeah, so anyway, also what I will say, some of the people I'm comparing him to, they've got like 30,000, but they are very like high level stuff. You have to know your stuff to know what they're talking about. And yeah, but this guy obviously has a lot of basic stuff. That, do you know what I mean? A lot of clickbaity stuff, so it makes sense he's got more subscribers. Anyway, that's it. We've got to do now. Wait, bread lines in the USA. It's disgusting. This is disgusting. This is, guys. This is not how life should be. This is not an American dream. It's not the life dream. It's just wrong. Especially when businesses are getting, literally big businesses, hedge funds, banks are just getting money wired to them on the day before the trouble even starts. I mean, the repo started September last year, way before there were any problems in the normal markets, and they were getting put on a money drip. Anyway, so that's the FinTwit review today. Hope you guys find it entertaining. And yeah, remember, obviously this is not a financial advice. I was just reading from Twitter, clearly. But yeah, Trading with Dan. Yeah, give me a share or a like, or however Twitter works, a follow. Yeah, that'd be awesome, and I'll speak to you guys soon.